Hey, what's going on, everyone? Just Matthew again, or Mr. Donnelly. I don't know if I say Matthew, whatever. So what I'm going to be doing today is sort of part three of our accounting work. Now, part three, this case being our theory question. So previously in part one and two, we sort of did A through to D, and then we did H as well. So that was all the balance sheet, the income statement, trial balances, and so on. So that's part one, part two. Part three, I'm just going to go through the theory questions. Now, we've already done the theory questions of class, but I sort of want to elaborate a bit more about some of the theory behind that. So what I'll do is now I'll switch over to that. Let's get that there. Cool. Let's make this a bit bigger. Good, love to see it. All right. So we've got the previous answers. So key facts: 20,560 was the net profit. You can have a look and see current assets 99,000, non-current assets 60,000. The liabilities total 100,000, or about 110,000, while the remainder 49,000 is funded by owner's equity. So those are the key figures we need to refer to. I'm just going to see if this lines up. No, it doesn't. Close enough. It does line up. So we're going to get this underway, I guess. Let's get this on. Ow. Why? So, here we go. I'll be working off, again, page 417 of the textbook, and we'll build from there. So, let's go to E. So E, referring to two expenses, explain the ethical considerations of recognizing and reporting any balance date adjustments. So we picked depreciation and bad debts, but you could have picked anything from the expenses. You could have picked advertising because you're reporting what really happened. Rent expense, acknowledging the expense happens every month, not just in one lump sum. You got the depreciation of van, fiction, things, but I think we did that as a group, and bad debts. So you could add rent, you could add advertising there. So the answer we came up with: the firm is faithfully representing the true value of the business's assets, liabilities, expenses, and overall profit. This is because they are choosing to be upfront and honest by recognizing the expenses as they occur, regardless of when they were paid. For depreciation and bad debt, it also means acknowledging the true value of an asset, whether that is the non-current asset or the bad debt. So with that, I'm going to change that slightly to accounts receivable, because remember, we go, and if you look at the balance sheet in H, we go accounts receivable less the allowance for doubtful debts. So that's acknowledging that true value. Okay? So it's just making sure for this question you're talking about this is the true value, please remember that. Okay? And that's where depreciation comes in. That's where allowance for doubtful debts comes in. F. Explain two actions Omnisport Sport could take to improve its adjusted gross profit without changing sales revenue. So, this number needs to stay the same. How do we improve? This number. How do we improve that 34,900? Oh, sorry, not that one. The 34,000. How can we improve this number without changing that number? What can I do? What can I do? What is the ideas here? So, how we do this? We go 3,005. So, how we do this? We got to look at two strategies. So, the two strategies we picked as a class was better inventory management, and that is to prevent inventory loss. And then the other one we looked at was cost of sales. So let's see what we put. So better inventory management. By having better inventory management, which should be a capital M, it will mean that the business will be able to keep track of its inventory and avoid mistakes that result in a loss in inventory. So it means keeping better track, not having loss of inventory, not having that expense, higher adjusted gross profit. That's sort of the idea. You want to go from A to B to C. C being the adjusted gross profit. So A is a strategy, B is what it means, here's how it leads to higher adjusted gross profit. Nice and simple. If we do change supply, it spells it out again. By changing the supplier to a more cost-effective one, it will mean that the business will be able to make the same sales figure but have a lower cost of sales. So that's what it means. This means that the gross profit, and that should be adjusted gross profit, because that's what the question asked for, will be higher. It should be noted that there is a chance for higher sales returns due to potential lower quality, and that's like a bit of a, oh, by the way, this could be a problem. So just be aware of that there. All right, we move on to G, referring to the ethical financial considerations. Discuss whether the employees of Omnisports should be given a pay rise in November 2025. So when you discuss an account, you've got to say why this should happen, why this shouldn't happen. Very similar to your business management and your legal studies. But we're going to talk about why the business should give a pay rise. And we've got some business management answers here. It should be in line with the industry award agreement, assuming it's not in there already. Making profits rewards the hard work. So by having that pay rise means they're making profits, you're rewarding that hard work. Profit equals hard work. Making pay rise, rewarding it. And by increasing hours wages, it means the closer checks of inventory can be completed to avoid loss or damages. So if we give everyone an extra 2 hours, that means, and there's say 5 employees, that's a 10 extra hours to make sure this figure may not happen, which could, I think that's a longer term positive. Could also lead to extra sales because they're open longer, or more people working, or they can get orders out quicker, so that better reputation, so more people might buy through there. So a few little decisions to be made there. All right, next, wrong one. Whoops, go back. There we go. Why the business shouldn't give a pay rise. It will cut into their profit or lower the profit, so may mean a higher wage expense with no real increase in revenue, just means a higher expense, and ergo lower profit. And maybe this is a busy time of year. Maybe October's super busy because, I don't know, cricket season's starting, or soccer season's kicking up, or they've got other activities going on. So maybe October's super busy and it doesn't translate to November. So those are all considerations you can think about. When you write your answer, it should not be in dot point form. It should be in full sentences. I'm only doing dot points for discussion purposes. Okay? Next, we've got the balance sheet, and we're going to go and look at H, discuss whether the owner of Omnisports should be happy with its financial position as at the 31st of October 2025. So we're going to go why the owner should be happy, why the owner shouldn't be happy. So they had a large profit from the previous period, a decent amount of assets, and low drawings. So if we have a look, we see low drawings, we see some high assets, so 99,000 and 60,000 means they're doing quite well asset-wise. You've got low drawings, and you see, they made a good profit as well. All indicators of why the business owner should be happy. Now, why the owner shouldn't be happy? Because remember, it's a discuss. You got to do both sides. So you look at the debt, 120,000 of 160,000. 120? No, 110. Sorry, 110,000 of 160,000 is funded by debt. That is bad. Please remember that. That's bad. That's 2/3 of the business is funded by debt. That means that higher risk. High inventory amount means you could be stuck with it. So if we look at the inventory, we see 64,000 there, and that's 99,000 right there. So that's a lot. Bank is in overdraft, indicating liquidity problems. So we see here bank is a current liability, means their bank account is in the negatives. And the higher short-term debts, 46,000 payable alone to accounts payable. That means they're going to pay this back within the next year. So that's a lot of strain on the financial or the bank of the business. So there is a little bit of food for thought there. So those are the ways I'd be attacking. I think the big takeaway from this, remember, if it's discussed, you got to say how it does, or they should be happy, and how they shouldn't be happy, or whether they should give something or shouldn't give something, and you got to say why and what the economic consequences of that are. So hopefully this short little tutorial has made a difference. On that note, stay safe, look after yourself, and I hope to see you soon. See ya!